Hey, what's up, guys? Welcome back to another episode of Price Targets with your host, Bitcoin Jack. I'm gonna try and not butcher this video with coughing too much. What I'm gonna do here is, if I do have like an attack coughing, I'm gonna like mute my microphone. So if I go silent for a couple of seconds here, you know why. That said, looks like the market and the sentiment, everyone just got very toxic and angry. It's been tough out there for a lot of people, and basically, since last video and basically for the last 10 days, pretty much, we've just been ranging off that bigger wick, and people, still divided whether this is a reversal or not. So I just want to go in, talk a little bit about reasons why we could be bullish, reason why we could be bearish, and just a general trend. It's just okay. So let's just start with the things we've talked about without mentioning them again and again. But just took a few tweets here, put them on the chart. It took me a while to give up, which was basically here back in November. Market wrecked me. I went to serve and travel, came back and decided to start rambling about what the Fed was going to do. This was in February, and then I made this video on policy and geopolitics and whatever, trying to summarize the issues ahead. And now we're here. Okay, so now we're here, and I'm trying to not just find reasons to be bearish, but I want to be aware of the risks to the downside, systemic risk, etc. So today I posted a tweet storm, 22 tweets, this one, about potential risks I'm seeing, and I didn't go into detail on each and every thing I mentioned, and there's more details and components to it. I try to keep it simple because these things, they're massively complex, and I didn't explain everything in detail. It is what it is, but it is useful as a guideline to start thinking for yourself what the risks are. If we combine that with a non-accommodating Fed, there's just on that side not a lot of reasons to be bullish. So what is there out there that we could potentially interpret as being bullish? And there's one thing that I do understand. We had these lows in 21, like early 21, had this rally. Elon Musk was buying, BlackRock was getting involved. Who wasn't? Super euphoria. We sold off back into the level, hit the lows, and then reversed. Then market came up, took these stops, tried to go above it, failed, sold off. So the whole mantra here is, this is in the back of the people, their mind. This is in the back of people, their mind, and they're gonna, they're seeing this as a structure where we're doing the same as up here or down here, and this is just going to reverse up, which from a purely technical perspective wouldn't be a very silly idea, right? But to me, with knowing all of this, there is just some kind of reason to wait and see. And even if it does go up, considering all of this, I would assume it's going to be just a dead cat bounce. I don't think this is this was large enough to trigger a dead cat bounce, which is why I'm assuming we're going lower. I could be wrong, obviously. And I want to go back to this chart. So 10 days ago, I posted this tweet thinking about this kind of range for the next 10 days or so. And, kind of been, a lot of people were like kind of, angry with me because, there was no entry, stop loss, whatever. I don't have to give that to you guys. I think I'm not your financial advisor, and if you disagree with that, you know, that's fine. So, well, this is kind of, 20, 22-ish, 21-ish, this range here. And it's 10 days later, and we're pretty much still ranging. Oh no, wait. This is definitely not 21. This is like 20, 27 or something. So we went a little lower on that. Depending on what exchange you think is telling the most truth. So yeah. So one thing. The complex thing here is if you look at, for example, Finex or Binance, so they went to like 26.6, and then because of the Tether DPEG we saw, there's a bunch of other exchanges like Coinbase that went a lot lower. So this is tricky. In my opinion, that's another reason we go down here again to establish a fair value, because everyone, the market needs to arrive at an efficient consensus on pricing. And obviously it didn't because of the DPEG, which was silly. It restored shortly after. So yeah, I think we're getting very close to the end of this range here. I identified like the 32 area as the top, and we haven't really been able to reach into the level. We go to the hourly. I believe that last week we had this one, this diagonal up here, and I was kind of waiting last week for either this area or this area to be tapped, or both, and then trade that in the range. But the range has been a lot tighter, and I do believe that is, if you read that thread I posted today, I think there's been a bunch of market makers that were obviously already always active in the market, but had to like run over hours on the whole Luna debacle fiasco and other funds to facilitate rebalancing of their books and their losses in a tight and cleanest way as possible. So I would dare to think that most of that is now digested by the market. The 10-day period I outlined is close to getting to an end. So we have some expirations today of options of the CME, and I think the Deribit did expire this morning at 8 a.m. UTC. That and the fact that the S&P 500 had a large options expiration and VIX contracts expiration. I would assume that the containment that we're seeing here is reaching a point where volatility can come back into the market, and then we're gonna go down. I don't want to jump the gun on this, but to me, it makes sense that over the next, I don't know, that by the end of the month, early next month, we're gonna have hit like the low 20s and then bounce back to, I don't know, maybe current price or slightly lower. So essentially, price to come down here in this region, tap the orange. Maybe not as fast as I'm drawing here. This is just not time accurate, but just a visual of where we're going to just bounce back into early June, and then start selling off further to the downside. And a lot of what we're gonna see, if I'm right, I'm not talking in absolutes here, so forgive me if you interpret me talking in absolutes. I'm not, this is just how I'm positioning myself and my expectations. That means that the aggression and the depth of where we're going by, mid of June, end of June, is going to be very determinative of the eventual real bottom. Maybe I can. Okay, so I just get rid of this, and this is just one of the interpretations, but in my opinion, and this idea, I floated this idea earlier, but if this was just all a giant, corrective structure, if you want to use Elliott waves kind of terminology, there is a chance that this is just a running flat or just a general flat where this wave kind of ran quite high, but it's with it's not too high. Where this is like your first wave down, your second wave, and then your third wave down is going to happen here. If this is A, B, and then C is occurring here, there's a good question whether this being wave 1, 2, and we're in wave 3. So I would assume that there's at some point we're going to see a giant rally. Okay, so if you want to be really bearish, we go to we'll go to 12 down here, and then there's going to be massive like 2x rally to come and retest this region. And then the question is, is that the end of it, or is there going to be another drop down? Maybe if you go as low as here, you're not going to reach 30, but maybe like 25. But so it really depends on what we're going to see in the next couple of days, into like mid of June, to be able to kind of figure out some assumptions on where the bottom is going to be, the real bottom. And I do think that wherever we stop, like in the mid of June, is going to be a bottom worth playing to the upside, like not just being spot, but once we find evidence of a bottom, just long it with size. So that's kind of what we're waiting on, and I'm not going to be in the middle trying to catch the knives. If this does revert into here and it holds whatever, fine, leave me behind in cash, and I'll find a new opportunity to participate. Kind of my thoughts there. I think that's where I'm going to leave the Bitcoin analysis at. A lot of huh? Seen people bitching about the ums. So 30 minutes in, I just want to, if you guys enjoy these videos, I want to have your attention for Primexbt. They're sponsoring this content and they're making it possible to make these videos. I really appreciate them, and they do have an offer where if you register through the link in the description below, you can also see it in the watermark, and then you register yourself here. You go to account and you'll see promo codes. If you put in Bitcoin Jack with capital B, capital C, capital J, sorry, they're going to give you a deposit bonus, which is quite sizey. So if you enjoy these videos, consider checking them out. It helps them, it helps me. So that would be very much appreciated. Saw a lot of people actually register in the last couple of weeks and deposit, so that's really positive. Thank you guys for doing so. Appreciate it. And then there's this other thing. I just mentioned a lot of contracts expiring today and the fixed contracts expiring last night, which in my opinion is going to take away some containment in the fix and the volatility in an already very volatile equities market. If I go to the S&P 500 and open the daily, this is our setup from last a couple of days ago. Price was literally here. Talked about this zone here being like this, liquidity gap through it, retested, come down lower. We're absolutely nuking again today on the S&P 500 to 2% plus. This is just not going to help out. If you read the thread I posted on, systemic risks that we have, you have to consider that after Cathie Wood, Saylor, Elon, whatever, a lot of family funds and other kind of hedge funds, that were looking for yield, got convinced, okay, maybe we should buy Bitcoin. And now the entire environment is turning against this risk behavior. And, Bitcoin is relatively liquid, especially now. We're seeing a lot of making in the market. So it's easy to liquidate Bitcoin without moving the markets too much. And it's, they will interpret it as one of the most riskier assets in their portfolio. They're probably down a lot already. So it makes sense that they will be cutting. So these are like little dominoes that kind of push the market further down. And the S&P 500 falling, the Nasdaq falling, it's just not going to help out the bullish case for Bitcoin at this point until they're gone, until they have sold everything or most of it. And it's very difficult to determine at which point they will start liquidating some of their positions. Saylor is saying he won't do it, which, I completely believe him being stupid enough to hold on, and hoping that he won't get liquidated. There's other, people who will start. There's TradFi desks that will definitely try to exit, and then, okay. So word on the street is that banks are racing to get crypto to their clients, which I'm gonna assume here is them, having exposure and looking for liquidity, trying to reduce their exposure. Again, not trying to fight, just using whatever I hear around the block, hopefully into my advantage and you guys listening to my ramblings. The other thing I want to say is that at some point I'm going to be wrong about all of this, as much as I was wrong when we got to 69k and I thought we were going to 100k. There's nothing wrong with changing your bias, and it's I would definitely approve if people on Twitter would be more flexible. There's always these camps, bears, bulls, yada yada yada. It's very polarized. It just doesn't make sense. Like, it's fine to have a bias and trade it one direction, and then if things change or you're wrong, have no opinion or change your bias, if that makes sense. So anyhow, this doesn't help the bullish case on Bitcoin. It's following expectations here, and at this pace, I wouldn't be surprised if we get down here quickly before we actually see a larger rally. So June-ish, see another push down early June, and then mid of June probably would make a lot of sense to see some relief from shorts closing, right? I wouldn't mistake that necessarily for that's the end of it, because at some point there's no reshuffling trillions in dollars of books, but they can buy some downside protection, and they will have to close that at some point. And in an illiquid market, that's just gonna create a bounce, right? So that's where things will start flying again. That makes sense. Let's see if there's anything else I want to talk about here, because I'm in 20 minutes, and I do think that's. Oh yeah, so the gold trade. The gold trade is interesting right now, because we're now gonna try and what we're seeing is we're seeing bids on government bonds. So we're seeing the yields go down on the 10-year, and the 30-year, and also the shorter term. So that means there's people who are bidding the auctions, and the yields coming down. Bonds are slightly bouncing, and that means that real rates are going a little bit more negative again. So the minute real rates started becoming positive slightly or equal, that kind of fueled this sell-off. Aside from the USD going up, real rates becoming interesting, people start bidding auctions or getting into fixed income instruments, definitely pulled some of the safe haven money in gold. If that is something, if we're going to see a lot of flow from equities to the auctions, that's going to delay this trading down here. So that's one thing to keep in mind. There's probably going to be a little bit of a struggle here to get through it, and some retesting. I would assume that we come back up here, then come back down here, lose the diagonal for real, and then trade into the 1600s. I think gold is definitely something to watch, because it very much reacts to. I'm gonna take a sip of coffee here. It's gonna very much react to the whole inflation / yield / what is the Fed doing / whatever. So very important one to keep an eye on. I can show you the rates. Where are you? Yeah. So you can see that, for example, it's not breaking down. It's like not the end of the world here, but you can see that we're seeing some slowdown. Same on the 10-year, and here as well. So that kind of, if this keeps going up, that's going to be a net negative for gold, obviously, because real rates go up, unless inflation also keeps on grinding higher. But higher yields, same inflation or lower inflation, is probably going to drag flow from gold to bonds, and that's not good for gold. The other way around, gold's going to keep on coming down if the situation is inverse. I think that's it. Like, I could keep on rambling. Talked about this on Twitter. Just something to watch. This is Bitcoin dominance. It's not a tradable chart in my opinion, but it does have, like as a whole, as a metric, as a macro metric, or like large higher time frame metric, it just has a lot of merit in my opinion. This looks like a wedge. Looks like it's breaking out. Feels like it's very we're going to see a very similar thing as we've seen here, but then just inverted. Sometimes you just got to use your imagination on these charts, guys. I'm joking, but yeah, this feels like we could rally into at least to retest like the 50. I think the best way to describe that is taking chart like Ethereum. In my opinion, this is just my opinion, but I haven't been a fan of Ethereum for a while now. I mean, I use it and it's useful. I just think they should have done some things differently, and it's a challenging road ahead for Ethereum. But if this is euthanasia roller coaster, I do think that if things get really bearish, that this is just going to drop down here. Full reset of the market. I saw this funny tweet today. It was like, how did it go? Bear markets create Bitcoiners. Bitcoiners create bull markets. Bull markets create shitcoiners. Shitcoiners create bear markets. Something like that. And on the grand scheme of things, if that's where we're heading, and I do believe there's quite some evidence that this is not over in the short term. Then ETH tends to lose a lot here. Kind of come down and retest the accumulation here. So it makes sense to expect the Bitcoin dominance to reclaim. Okay, well, I think that was pretty good with my voice. No coughing, not a lot. So once again, thank you Primexbt for sponsoring. Really nice that you're doing that. And guys, if you care about these videos and you want to trade margin on margin, future contracts and perps and whatever, try and go to my ref link description below / in the watermark and use the promo code BitcoinJack. It helps me out, and it's really a nice platform. Thank you for listening, and catch you a couple of days. Cheers.